Hey everybody, it's Brian Shannon from Alphatrends.net. Today is Friday, the 15th of December. Let's take a look at the closing numbers for the week. The S&P didn't lose 268 today. It paid a dividend of $1.90, so it was really only down 77 cents compared to yesterday's close, but they take that out of the number for the dividend, of course. And for the week, though, just another solid week across the board. So let's take a look at these charts and make some sense of it. The S&P 500 on this weekly chart is rapidly closing in on an all-time high up here, which would bring it to about, what is that level? I've kind of forgotten. About 4.8. It was 479.98, I believe, is the all-time high. So we're rapidly approaching that, just 10 points away from that right now. So that seems inevitable, most likely before the end of the year with this bullishness. So we didn't close below the volume-weighted average price from the Fed. That's that blue line. We have to look at the futures market here. So you can see this is the Federal Reserve announcement right here. So we put an anchor on that. And you can see that we did close above that level. This is just kind of a little bit messed up because of the dividend that was paid. Nonetheless, it's still in a major uptrend above this rising 5-day moving average here. And on the daily time frame, we're above a rising 20, 50, 100, 150, 200, etc. So it remains innocent until proven guilty. Maybe we're going to get a little bit of a pullback next week, but I'm definitely not looking for this market to fail or looking for short opportunities. I just don't think that's the smart way to handle it. The all-time high for the NASDAQ is 408.71, and we are just about 4 points away from that, a little less than 4 points away. So that also seems inevitable. Maybe it's going to be one of those situations where the market breaks a new all-time high and then starts to pull back a little bit. That's something I'll be definitely aware of the possibility. It's not something I'm looking for it to happen. I'm not looking at this and saying, hey, there will be resistance there. We only know resistance after the fact. I say that all the time. And it's just true. We've got this beautiful pattern of higher lows above a rising 5-day moving average and higher highs as well. So no reason to look at this as anything but bullish. And as long as we have that rising 5-day moving average, I'm not going to waver from that stance. The Russell 2000 is, I think I read somewhere that it went from a 52-week low to a 52-week high in just 33 days, which is a record. So it does bring it to the top end of the range here, and a possible place where some supply will be found. It's failed in here the last 3 times it was up in this area, but I'm not looking for it to fail. It's still got positive momentum. We broke a little band of resistance here after that Federal Reserve announcement, and then just continue to hold on to the gain. So the good news is there's just so much bullish activity in the market overall, and what we're seeing is just a widening out of the opportunities in the individual stocks. We've mentioned obviously a number of them here recently. I mentioned in last Friday's video ISRG, and that had a nice move. I had also put it on Twitter right around in here at 315 or so. So that was a really nice trade this week. We were also looking at Amgen next week, which last week, which started out okay, but it's kind of failed here a little bit. So we'll talk about some more opportunities from the individual stocks here shortly. Semiconductors continue to be the all-time leaders here. They are at another all-time high here, so nothing bearish about that. The momentum continues to drive higher. We're not getting much opportunity for pullbacks and fresh entries at low risk positions. So the momentum remains higher. You definitely don't want to fight it. That's first and foremost. Biotechs, someone had suggested to me that I was bearish on these, and I said I haven't been bearish on it. Not while we're above a rising 5-day moving average. I have been less enthusiastic about this group though, because they're still trading within a really kind of messy range. We've got a declining 200-day moving average and advancing 50-day moving average. I prefer the cleaner setups, but if you're long these biotechs, then you've done a great job in here if you're long on this rally, not if you're breaking even, of course. And that's the thing is we want to be involved in the right markets at the right times. And buying up at these levels, maybe you'll make money, but I would prefer to pass on them. There was no slowing down in the momentum for the financials. And again, I don't like to make predictions, because if I had made a prediction that this would be resistance, well, that's obviously wrong. We're not looking to make predictions. We're looking to see how a market acts facts in a certain area to say, here's a level of interest. We've come pretty far, pretty fast, so we've expended a lot of energy. If the sellers are going to slow down, this would be the buyers are going to slow down, this would be a good place to do it because it's seen previous resistance in here. But we have zero evidence of that on this shorter term 30-minute time frame on the right. We're still above the rising 5-day moving average. We have been pretty much all week here. This is where we started the week, of course. So and that's what that line is. That designates where we were 5 days ago. And that always moves forward one bar at a time. Here, every 30 minutes, that line moves forward one spot. So we're still innocent till proven guilty in the financials. I would not be looking to sell these by any means. I'm not optimistic about them, but I don't have to trade everything and make money. That's not the point. My idea is to look for the low risk, high probability individual stock trades. Energy came right up to this 200-day moving average in the year-to-date anchored VWAP. So maybe it's starting to neutralize a little bit, but I definitely wouldn't call it bullish. If you look at crude oil itself, it's in this area where we were looking at the possibility that it could find some buyers, find some support. That is. Let me move myself out of the way. So this is the anchored volume weighted average price pre-COVID and from the COVID low. So maybe it's starting to stabilize in there a little bit. I'm not, it doesn't make it bullish though. It's just maybe stabilizing, as I mentioned. So let's see, what else do we have here? Ethereum, I wanted to talk about that. Last week I'd mentioned that I'd sold some, and this week I purchased it back at 2180, right around in this area here. So I'm still, now I'm long a full position in that and holding that for the longer term. Some ideas to look forward to for next week would include Fastly, FSLY. This one is one I'll have an eye on, and I update these every single day for subscribers to Alphatrends. Mobileye is one that it's not quite ready to buy yet, but I've got an eye on it. By the way, if you're watching this on YouTube, they tell me it helps the algorithms and all that if you give it a like and comments and that sort of thing. So I respond generally to all the comments in there. So keep an eye on Fastly, keep an eye on Mobileye. PATH has had a big run, but when you look at the weekly chart, it's still got room to run. It's let's take a look at the weekly time frame, and there's the anchored volume weighted average price from the IPO. You can see we've slowed down in there, but we're starting to maybe pick back up here a little bit. So that's another one I'll be keeping an eye on next week for some continuation. If I got involved, my stop would likely go under there. RAMP is one that I've got an eye on, as well as Riot. And speaking of blockchain and that sort of thing, it kind of did exactly what I wanted it to do, which was to rally up into this zone, get a little pullback, and early next week, I think you're getting back above here could see this go, and it'll depend, of course, on whether the crypto space holds up. SMAR is one that I got long today. It's kind of a goofy one here on the daily time frame, but when you look at the weekly, it's got some room to run. So I'm giving that one a little bit of room. I've also got an eye on UPWK for next week. This one has been trading in a nice tight range the last 5 weeks. We've got a rising 10, 20, 30, 40-week moving average. That tells me that all these trends on the weekly time frame are in alignment. And then when we look to the daily time frame on the left here, it's kind of breaking from this box. And the 30-minute time frame, it's got some room to run. So that'll do it for me. Take a look at alphatrends.net and be sure to follow me on Twitter. If you're not following me on X, then you're missing out on a lot.